Over the last few months, there's been a huge shift in video conferencing solutions, and Zoom has emerged as the leader. Businesses use Zoom as a way to get more done while working remotely. Schools use Zoom as a digital classroom for their students, and popular shows are helping to bring Zoom mainstream. Their impressive growth is translating to their financials. Zoom doubled their guidance for 2021, and their revenue jumped to $328 million in the first quarter of 2020, up 169% year over year. And of course, Zoom stock has been one of the hottest stocks on the market. There's been lots of analysis about the price of Zoom stock by looking at multiples like price to sales or price to earnings. And these multiples are crazy high, but they tell you nothing about the fundamentals of the company. In this video, I'm going to show you how much I believe Zoom stock is worth by looking at the intrinsic value of the company. As you can see from this 6-month chart, Zoom stock has been on an absolute tear. Zoom stock was trading around $70 a share in January this year, and now it's trading for over $240 per share. People are excited about Zoom's growth opportunities, and Zoom CEO Eric Yuan is bullish about Zoom's total addressable market. Yuan said, "We believe the growth opportunity for Zoom is significant. IDC estimates that the markets we address will represent a $43 billion opportunity by 2022, but we believe that it is even larger than that as we are in the early stages of video becoming the new voice." Zoom's just scratching the surface of its potential market opportunities, and you can see why investors are excited when all signs point to Zoom grabbing the biggest market share of the video conference market. However, Zoom's stock price has skyrocketed, so I thought this would be a good time to make a video on whether I think Zoom stock is still a good buy. To do my valuation, I used a 10-year discounted cash flow analysis, which I believe is the best way to give a fair value of Zoom. Year one is easy. I set revenue to $1.8 billion based on Zoom's guidance for 2021. To estimate revenue until 2029, I used Zoom's estimate of a $43 billion market opportunity in 2022 and estimated the market would grow to $82 billion by 2029 if the market were to grow at a compounded annual growth rate of 10%. To be clear, an $82 billion total addressable market in 2029 is bullish, but I believe it's fair based on the Zoom CEO story and the expected growth for the video conferencing market as a whole. Here's some other key inputs for my valuation. Obviously the biggest one, I'm estimating that Zoom grabs a 50% market share in 2029. This valuation is a very optimistic story for Zoom. Another key factor, I'm estimating that the operating margin is going to be 22% in 2029, which is the median for software applications in the United States. I have the cost of capital starting at 8% in year one and lowering to 7% by year 10. And I have a sales to capital ratio set at 2, which means that I have Zoom earning $2 in sales for every dollar they invest in capital. After inputting all the numbers on my spreadsheet, my valuation for Zoom came to $172.91 per share. This is lower than I was expecting, and obviously it's quite a bit lower than what Zoom stock is currently trading for at around $240 per share. And remember, my valuation for Zoom was bullish, with Zoom grabbing a 50% market share of a big market by 2029. Does that mean I'd go ahead and short Zoom? Absolutely not. Zoom's a great company, and I wouldn't bet against it. However, I wouldn't buy Zoom stock right now either. I believe that the stock price of Zoom is just way overvalued compared to the fundamentals of the company. If you like this video, go ahead and hit that like button and subscribe to the channel. It would mean a lot. Thanks for watching.